It's Thursday. Let's talk about some legacy charts. It's been a crazy couple weeks for certain stocks, GME, AMC, just to name a few, unless you've been living under a rock. Everybody is talking about what happened with GME. My general view is the move is done. I think that's obvious. I think anybody remaining is just going to be a bag holder like any other crypto community. And it's interesting the parallels between the coping mechanisms in Wall Street bets compared to some of these crypto communities where they lose 50 to 90% from the top and then it just never comes back. So I'll talk about the chart at the end, but yeah, I wouldn't be a long GME anytime soon, personally. Starting with the usual suspects here, the correlations between the VIX, the Dixie, gold, SPX, NDX, kind of why I'm even doing these videos. The correlations have just been so strong. So this is the rolling 30-week correlation. Dixie, DXY, US dollar index versus BTC. Gold versus BTC. SPX, NASDAQ versus BTC. So the first thing I always look at is how correlated are we to US legacy markets? And we are extremely correlated, painfully correlated, 80 to 90%. 95% maybe at this point in the rolling 30-week, and we are just screaming historically at that correlation. So if US legacy markets start to tumble, which I'll look at individually, but they're looking mighty toppy, and if they start to tumble, we're in trouble. Flip side of that, obviously US stimulus, money printing, terrible for savers, great for alternative assets, great for stocks, because that's a signal to those with plenty of USD that their money is better off somewhere else than USD. Now, if we look at the Dixie correlation, still rather negative 80 to 90%. And, all this sort of lines up, minus the gold correlation. The gold correlation has gotten increasingly negative over the past few weeks. We'll look at the chart, and I'll try to surmise why, but a bit odd to see gold sort of decouple from BTC. Potentially it's a signal that there's some rotation from gold into BTC, and gold is no longer seen as the only store value alternative. If we look at the Dixie first, it broke down below 90, but since then it's bounced quite significantly. It printed this multi-month, 2-month actually, which for a legacy pattern is a really great total duration for the pattern to actually work out. Very similar to August to October, that inverted head and shoulders mess, kind of the same messy shoulder, shoulder, head, shoulder, 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 whatever. Breaking out. The previous inverted head and shoulders didn't quite reach the 1618, so we're almost there. And really I'm watching this because if this continues to have a bullish rally, I'd expect BTC and crypto in general to cool off. Now, it's a bit odd because DeFi stuff is 2xing, 3xing over the past few weeks, sort of along with Dixie, as far as the move up. So I don't know, everything's all over the place, right? Since the beginning of the year as far as what's moving with what. But the 30-week rolling correlation with BTC specifically is still highly negative. If we look at gold, here's the gold on the weekly XAU USD. On the weekly chart, here's BTC on the daily chart. And once you see enough of these cloud fractals, you start to see the potential and the possibilities as far as the if this then that decision tree. So gold on the weekly kind of looks like Bitcoin did on the daily as far as, January 20th-ish? We actually did get a double tap of the Kijun, which morphed into a W double bottom on lower time frames, and that broke up. So it's still potentially the case with gold, although I'd still watch for this edge-to-edge setup, which looks better and better every day, every week. Again, it comes down to the stimulus. If it's passed, if it's priced in, if it's $4,000 versus $2,000, who gets it, all that sort of stuff. The market may or may not react to that, but if and when the stimulus passes, I'd expect that to be bullish for gold. And that would morph this into a W double bottom, which would make it look more like bullish continuation than bearish reversal. If you look at silver, the Wall Street Bets hive mind / disinformation campaign attempted to squeeze the silver shorts. Probably a fool's errand considering how much bigger that market is compared to GME. But hey, bravo to them for trying. You can see it had a nice little spike over the past week to new multi-year highs, multi-decade highs. No, since 2013 basically is when it was last at this level. It was already well on its Wyckofian journey for markup continuation, but this will probably need to continue consolidating. I'd expect this almost to just make some sort of ascending triangle for the next 2 years or something, and then maybe break up from there. In general, metals and legacy stuff takes forever to actually move relative to crypto stuff. And again, you can see this W double bottom didn't exactly hit the Kijun here, but all this stuff sort of looking similar price action wise lately. Now, what's not looking similar, obviously, is NASDAQ and SPX, S&P 500. We are just screaming here. So last week we had a bearish engulfing candle. This week we potentially have a bullish engulfing candle. Very odd, super volatile behavior. I mean, kind of unprecedented since maybe 2018. Just looking at the size of these candles in the depth of the week-to-week moves is just very unusual for legacy markets. And like I mentioned last week, just as a simple gauge of how far away from the mean this stuff is, if you look at where we were in 2017, how those TK lines looked, where we were in 2019, how those TK lines looked, and where we are now in 2021, how these TK lines look, it's be careful territory for sure up here. But once again, we passed the stimulus, and TA is kind of irrelevant because we're just printing money. So that may send this screaming higher, just based on fundamentals. Here's the NDX, NASDAQ. Again, same thing, TK line, TK line, TK line, just observing where we are when we broke down those past 2 times and where we are now, just in the stratosphere. All these have bearish divergence as well, growing bearish divergence. Again, you see the same thing with the bullish engulfing, bearish engulfing candles, just back to back to back. Extremely volatile situation up here. Looking at Nikkei as well, that also has a, this is on the monthly chart, just a growing bearish divergence, right? Even though this is 1991 last seen, this price, the momentum is definitely waning, but collectively it might not matter because of inflation or money printing or whatever you want to think of it, negative interest rates, zero interest rate policies, any of that stuff should fuel this higher. At the end of the day, there's a 5-year bear div on this, whatever, right? But if savers are punished for holding fiat, they're going to look to other means to invest. Looking at GME, man, what a wild ride that's been for lots of people. Congrats to anybody that made tons of money on that. I avoided it, but I don't know if we'll ever see craziness like this in legacy markets. I'm not an expert on gaps or gap fills or any of that stuff, but I don't know if a chart's ever looked like that in the legacy market. Right now, the current unfilled gap is between 120 and 220. I don't know. I'm not a believer in any of this ever reaching back up there again. All the people in Wall Street bets who are still holding for God knows why. Probably people who got in between 300, 350, 400. This was some sort of diamond top as well. Just you get this rhombus shaped thing and mega volatility in the middle. But by the time Robinhood restricted buying on the platform, and a lot of other places did as well, I think it was pretty obvious that the music stopped. It's time to cash in your chips. That was a few days ago. So again, if you're still holding, I don't really have sympathy for you. I mean, how greedy do you have to be? You're up how much percent? A lot of people, what probably happened is they saw it super late. They don't want to close at a loss. This is just natural trading behavior. And they're just going to continue to ride this down, back down to sub 50, sub 20, sub 10, whatever it is. And they're going to just lose most of their money. That's how it's going to be. Here's AMC, another just absolutely nasty looking chart. Gaps everywhere. Mega volatility. This 10x in a couple days from the bottom, essentially. Now it's down over 50%. I'd expect this to go back down to sub 5 just to fill whatever gap this nastiness is. I mean, I feel really bad for people buying this and believing this is going to go back up again. I just be glad you're trading against those people. And then lastly, Doge, not a legacy chart, but something that has actually held its highs here unusually, potentially because of Elon Musk tweets that come from a potentially hacked Twitter account. But surprisingly, Doge has held up better than GME and AMC. So what other legacy charts are you watching that I'm not looking at? Let me know in the comments below. Happy trading.